Tata Motors, that of course is in focus. You do have a challenging time in terms of the outlook that you've had for this one. But tell us about Tata Motors in terms of the analyst meet as well.
Well, definitely, I think, and it has been focused because of JLR and its cyber attack, and that's given one of the most focal points. We did get an update from the company that they have started to resume some key operations. Yesterday at the analyst meet, they also discussed that it's coming up in a phased manner, so that's a key positive. Overall, they're expecting in terms of demand outlook, that does remain challenging, and that's going to be one of the key ones because it's in near-term pressure experienced across geographies in Europe, China, amongst others, and the US, which is one of its key markets. 25% of the company's volumes comes from that market. So that's for JLR. It is reeling under pressure because of the cyber attack and production being halted for the second time this year. First time was in April due to the tariffs. When you look at the GST cuts as well as that is aiding essentially the passenger vehicle space as well as the CV space, they're expecting a single-digit growth in H2 FY26, but that's high single digits, so that's a key positive. They've also highlighted that 25 to 30% of the bookings have come from September 5th till Navratri as well. So that's another key positive coming in because that was the Shraddh period. So they have seen increased booking at this time, while they are expecting Q3 to see slightly higher discounts to push much more volumes, gain back that market share. So we are expecting some pressure on margins for Tata Motors, but that seems to be the consistent across the board for someone like a Maruti as well, who has taken a higher price cut on Brezza to match the 3XO in the market. Amongst others, management is expecting a 7 to 8% growth as a sub 5% growth for the passenger vehicle space, and that largely is something to watch out for. CV outlook is much more positive. Iveco, which was one of its key acquisition of over $4 billion, likely is EPS accretive initially, but that'll be the other progressive of how post the demerger, the focus shifts on that one. They've increased essentially the outlook to 6 to 8% for the industry for commercial vehicles versus 5 to 7% earlier. So that's another key positive. And finally, expecting a double-digit growth for the industry in H2 as well. So that largely seems to be what the management is indicating in terms of the analyst meet. October 1st is the day for the demerger, so we'll be taking out the conscience essentially of what the management does post that as well.
Well, absolutely, an important commentary to say the least in the light of the recent developments concerning JLR as well. Thank you so much for getting us that update as far as Tata Motors then is concerned. But let's add another stock to your list. Let's talk about Welspun, that is also in focus after its first analyst meet after the imposition of Trump tariffs. In fact, we do have Jasmeet joining in with that